Is this legit? I'm Sophie, tech marketer and social scientist. When I'm not advising tech startups on their marketing strategies, I'm helping protect everyday folks from online threats.
I'm Kris, a marketer with a background in both agencies and tech companies.
This week on Is This Legit?
Thanks for giving me $10 bajillion, but that's not a real number.
What is happening?
Happy podcast day.
Welcome back to Is This Legit? I'm Kris.
I'm Soph. Following our startup episode from last week, we went to Slush and spoke to a ton of different people in the startup world and also some VCs. What the hell is VC investment? And is it legit?
VCs, people with a lot of money.
A lot of money, investing in a lot of wild hunches.
We also have our uniforms. I'm not wearing it, but I do have my
VC cult uniform. Yeah, what is he?
Patagonia vest, obviously. The vest is actually quite nice and good quality. You can if you get too hot, you can open it up. Yeah, so it really makes sense, but that's part of the uniform.
Venture capitalists basically manage funds. So their role is raising money from other people, other organizations, and then investing those in either super early companies or slightly later. But basically their point is making big bets and hoping for big returns. They're
sound just like money movers.
Pretty much, yeah. But the whole point is that they know that most of them won't pan out. They won't become the next Google, Facebook, Apple, whatever, but they're hoping that at least a few of those make a high return.
What is interesting is that until I joined a startup, or I didn't even notice that a lot of young people, younger than me, want to become a VC. I've seen a lot of people that are yes, I want to work in the VC fund, and I'm interesting. I don't recall people in my generation saying that, so I'm almost is this a trend after Uber and WeWork and all of these big successful companies where people were thinking that being a VC is exciting?
So a lot of VCs will take big bets, and so they're early movers a lot of the time in future technology, and that sounds really exciting. I'm in on the next big thing earlier than other people, and that is definitely very alluring and attractive to young idealists, I would say.
One thing that we did during Slush, we asked people, if you would start a startup now, would you bootstrap, VC, or angel fund? So let's hear some of their answers.
Bootstrapping being not taking external investment, VC taking from those investment groups that are making big bets, angel fund are individuals funding or investing in companies, investing their own money.
Well, I've gone the angel road once in my previous startup. Here I'm sort of looking to build network with VCs, but maybe what I'm doing actually is the bootstrap.
First, it depends on which country I'm opening my startup into. But let's say currently I'm living in Germany, and in the ecosystem, I see there's so much support from the government. And of course, once I have a decent MVP ready and stuff, going VC would be my way to go if I'm getting a good deal.
Bootstrapping is probably the way that I've done it so far.
Bootstrap, I would say. I mean, like they say, the best time for raising money is when you don't need the money.
Bootstrap. I would bootstrap first.
So these replies were pretty consistent, no?
Most people would bootstrap, including the VCs. The VCs responding to this also said bootstrap, which is nice.
That says a lot about VCs, probably.
I think they know the downfall. They know the dark side, the tough part. VC investment is not for every product. It's not for every company. We've had these really big scaling examples in the past few years, and VCs are smart enough to know that, especially when you're just starting and you haven't figured out product market fit, taking blindly any kind of money that people throw at you is not necessarily the path to success.
Yeah. I was in a company that got investments from two major VC funds when I was back in China. And let me tell you, those periods after we received that money, they were very stressful. It was pretty much like growth at all costs. I was the only person in the marketing team, in a team of 10 people. And all of a sudden, after we got these 2 major investments, I got requests to grow the marketing team into 30 people. So yeah, I would agree that there's a lot of kind of clauses and conditions that you have to meet when you accept the money. And it's not necessarily the most strategic move for the company.
I think there's been a lot of examples that we've seen, especially in the US in the past few decades. Definitely, like, external investment helps you accelerate growth. And, we talk about, first mover advantage and being first on the market. And definitely it helps if you have some funds to make that happen faster. But then the problem comes because the VCs, their biggest priority is to have, how much X return on their investment quickly.
Yeah.
And so
it's not
sometimes
like they care about your company. They care about their,
the returns.
the returns.
Yeah. So especially for young founders, it can be really exciting to be like, hey, I actually have money to put my vision, into the market and make it work. But then usually more experienced or older people, VCs are not typically like 20-year-old. And so you'll have a lot of different opinions that are sometimes very well educated and sometimes, are very definitely based on experience, but then their priorities might not align with the vision you have. And because now they have equity in your company, you have to make it work for both.
It's not your money.
It's not just you.
It's not your money, and you have to dance according
You're
to
not
your
the
rhythm.
only, you're the only founder, but you're not the only owner. So
And I
you
think
just have to make it work in those ways.
that they have like multiple of these like startups in their portfolios. And so even if they do give you some advice or tell you what to do, you kind of have to follow that. But are they perhaps the best expert in advising you on what to do?
I think a lot of VCs have a vision for what they want to fund, but I would be a little bit careful if the VC cannot kind of like tell me like what is their vision for their fund, what is it that they can bring to us as a company, like what kind of expertise, connections. I would love to understand how they intend on positively contributing to the growth of the company, because you want it to be a good collaboration, not like an overlord telling you what to do and making you sell earlier than you're ready to.
Not listening advices. I'm not saying that you need to swallow my advices as they are, but digest them at least a little bit, not just ignore or taking all the advices and executing everything, which is also kind of, you need to be able to build your own vision on what you're doing and then do the right thing while doing it.
So usually I'd say VCs will have kind of some direction in terms of priority. So some will only invest at certain stages. They'll have maybe minimums in terms of how big the market size is, how saturated is it, what stage the company's in. Some of them will have like industries they specialize in.
Yeah,
but
that makes sense.
Yeah, but the thing is they invest, I'd say like the ones that I've spoken to at least, mostly will invest in subject matter experts or team. So they're not necessarily experts in that field. Otherwise, they'd do it themselves, right? Traditionally, they won't necessarily be the ones that can build it. That's why they invest in other companies. They might have some industry knowledge. They might have a bunch of other experiences. Some of them have grown companies themselves. So they definitely have a ton of really good experience. But then it comes when you might have investors from all over the world now giving you investment money and having different visions than you do. And so that alignment is like super important if you are going to take external investment.
Yes. And just a reminder that taking VC money is not the only way to do it.
No.
There are a lot of successful companies that have done it. For example, MailChimp. Everyone knows MailChimp. They bootstrapped for over 20 years before being acquired by Intuit. $12 billion in 2021. So not a bad deal.
Basecamp as well has been bootstrapped and still is, and is privately owned by the founders. 37 Signals is actually the company that creates Basecamp and other products, and they just don't need to, and they haven't needed to. They didn't want to scale at all costs.
I mean, if you have a great product that is already generating, like and I think Buffer is another one.
Mm-hmm.
I'm pretty sure that they are a privately owned company, and if you can do it on your own, you're profitable, why not? But I think if there's this want to become a unicorn, like growing to that, what was it, 1 billion, right? Most of these like unicorns, they did take VC money.
Yeah.
And I have a couple of interesting stats to add here regarding VCs. So actually, out of all the startups available, less than 1% of startups actually receive venture funding, according to angel partners. And I think what people don't realize is that there's a lot of conditions that a startup needs to meet in order to actually receive the money, even if you have a great idea. Or there's a lot of like financials that you have to prove. You have to get your paperwork in order. You have to meet a lot of people, do a lot of interviews. So it's not really guaranteed. Even if you talk to a VC, it's not guaranteed that you even like get to the point where they see that everything is in order. Yes, you're going to get the money. Like it's a big risk that they also take on by investing money into you.
Yeah. People say it's really hard to actually get VC money. You have to spend a lot of time. You have to do all these pitches. You have to meet all these people and, sell your idea and all these kinds of things. You're in a good position when you don't need funding, which also makes VCs really interested when you don't need it.
Another point is that 77% of small businesses actually rely on personal savings for their initial funds. So bootstrapping is actually more common than we might think. And partially because, yes, getting investments is hard. But I think a lot of what we heard from Slush also kind of confirms that people have their reservations in accepting VC money.
I've been in mostly VC-backed startups until now. It's quite an experience to get the original vision, mission, goal, all of that like higher level stuff, and then seeing odd strategic plans that just don't feel right. And a lot of the time, then it comes from different investment or other partners giving advice and them not necessarily agreeing. And then you see this odd mismatch of a strategy that kind of tries to tick all the boxes, but because they don't really go together, then you're just kind of like, I don't know if this makes sense. And I see it a lot. We're in Finland, and I see it with companies taking especially American VC money, where the work culture is very different and the expectation of return is very different. So then you have the less hustle culture that you get in Finland paired with VC money that definitely expects hustle. It can make for a very weird work environment. Is all I have to say.
Toxic.
Yeah.
I feel also maybe that's more related to these younger people who want to work in VC funds. At least that's the impression I got. But that VCs are a bit of like hype followers, which is not always indicative of whether funding goes to actually startups that need it or would use it in the best way. So one interesting stat that I found that in 2023, groups related to AI received $25 billion in funding, representing 18% of global funding.
So at Slush, they have the Slush 100, and it's basically the competition, pitching competition, and you get to send an application for your startup, and you compete against these other startups that will also pitch to get VC funding. This year, or I guess last year, 2024, most that got to the 100 either had AI in the name or were AI based in some capacity. Some of them were great. I mean, I saw some of the pitches, they were fantastic.
Mm-hmm.
Like really, like they still deserve to get their products made. It's not like they're trying to do the latest version of crypto Web3 something. It's still quite interesting to see. There weren't a lot of non-AI based companies that made it to the top 100.
It is interesting. I mean, it's almost like if you're not doing AI, you're behind. And even like existing companies, they almost like scrambled and tried to find a way to add in AI wherever they can, whether it makes sense or not. And even if it's a sub feature, it's still kind of like AI powered. And I'm like, you're not really AI powered. Like you just have like one extra feature that has
But even when it is, like there were companies, like I've worked at some companies that we had machine learning in the core product before Gen AI existed or was widely used.
It wasn't just a trendy term.
But they weren't necessarily using AI in their messaging. And suddenly now everybody's using AI. And then the investors that invested in these companies are like, well, you had AI from the start. You should have that on there. And it's like, no, that's not what the public is thinking of. When they're thinking AI, they're thinking like image generation, text generation, because that's what's been in the news mostly. These other companies, they're not AI products. They have machine learning or they have AI, like actual AI that's used within their product, but they are not an AI product. And like trying to explain that, do we need to hop on the trend because we think it's nice to have AI powered? Like, no. Next week's episode is AI legit.
Yes. So watch out for that one. But yeah, these stats kind of highlight the various funding avenues and challenges that startups face, whether they choose to bootstrap or go the VC route. And I don't know, it really depends on what you want to do as a company, I guess. There's no right or wrong here.
Do you have any cool stories for me? Any interesting contours?
Do I have stories for you? I love you. So yes, I'm putting on my detective hat and let's see. What are some of the reasons that people at Slush had such strong feelings about bootstrapping and VCs? So we're going to start off with our old friend SoftBank. If you listen to our previous episode about startups, you are familiar with WeWork. So SoftBank was one of the big investors in WeWork. They're one of the biggest tech investment funds ever created. They have like hundreds of billions of dollars, and they were throwing money at anything that moved, including a 1.1 billion investment into a company that literally called View, and it produced windows, smart windows. So they made glasses for commercial buildings that use low voltage wiring to control the tint. So when it's sunny, the window darkens to limit glare and heat, eliminating the need for blinds and reducing energy costs for air conditioning. So, okay, it actually does sound like pretty reasonable idea. The issue with that is that it was a little bit better in theory than in reality. The glass was really expensive to produce. And if there was one single imperfection, the glass could not be used at all. So there was a lot of product that was just thrown away. A lot of waste was created. Employees were discouraged from actually speaking up about their concerns over the manufacturing process. These guys from View were receiving a ton of money, not just from SoftBank, but a lot of other investors. And in reality, they were just burning cash and struggling with product failures. And SoftBank was one of the biggest investors, 1.1 billion. That money was pretty much used to repay other investors for their investments made into this company. Everything looked pretty good. They went public in 2021, but eventually, of course, all of the issues caught up and they're currently trying to delist from NASDAQ. So not the best deal for SoftBank.
Yeah, this is the kind of situation where you'd want to take VC money because it's definitely new tech and it's not cheap to figure out and to research. But is it going to lead to a profitable product? That's a huge bet.
Yeah, I guess there's also like a bit of mismatch in due diligence made. So I can't really say like the company was covering it up, but at the same time, there needs to be somebody from the VC side kind of checking in on the funds and making sure that this large amount of money is going to the right place.
Well.
Shady. Another one, and I think that kind of relates on some of the things that you will be talking about later, Soph. There's a company called Hone Capital, and FBI is currently investigating them. They are a U.S. venture capital firm, but they are funded by Chinese money, and allegedly they've been leaking sensitive trade secrets from U.S. tech startups to China. So Hone Capital was launched in 2015 with $115 million from China's CSC Group, and Hone Capital really quickly invested in numerous U.S. tech companies. So the probe from FBI addresses concerns that Hone may have used its position to benefit its Chinese parent company or authorities, particularly given some of its portfolio companies. So yes, that's an interesting one.
Yeah, it can be really enticing, especially when you have foreign investors that want to invest in your company. But yeah, we'll talk about scammy side of VCs and investment later, but this being one of them. There's a lot of legit VCs out there, but also where there's money to be made, there will be people trying to find less legitimate ways to make it.
Another one of my favorite stories is about Rothenberg Ventures. Very fancy name. It was founded by this guy, Mike Rothenberg, in 2012. And the firm was a rising star in Silicon Valley, investing in companies like SpaceX, Robinhood, and Bustle. And it turns out that this guy, Mark Rothenberg, was later convicted of fraud and money laundering. And while he had raised around $46 million with different investors, he pocketed about $18.8 million of that money to fund his lavish lifestyle. Some of it he transferred directly to his own bank account. Some of it he used to buy luxury cars with the Rothenberg Ventures. So people believe that they're investing in companies while actually maybe 1/3 of that money was just for the guy to live a nice lifestyle. Yeah. While VC funding can accelerate growth and innovation, you got to do your due diligence.
It's interesting because the first story is pretty legit in terms of like, there's a product, it's just so new. And that just happens sometimes that you invest in companies or products that might not pan out. Yeah, we get into a little bit of we're hiding a little bit of the actual struggles that we're having, but ultimately like it's a bit gray. Then we have the data mining, a situation of people wanting to give you money, but really what they want is to like find information out. So, sign NDAs before you actually show people stuff. But then, when we're thinking of VCs, like Rothenberg was really defrauding the funds that he was getting the money from, right? So there's definitely different angles to kind of watch out for here.
I think what the SoftBank case is interesting is that the amount of money they invested in this company, like $1 billion, is already next level. So I think it's kind of like signaling also to other people, to other investors, that this company is worth investing in. And just because they didn't do their due diligence, it's not that they're necessarily like faking it or scamming somebody, but their carelessness and their reputation is actually damaging for other people. And I think that's kind of like the interesting, it wasn't like malicious in any way, but it harmed a lot of people.
Yeah, unfortunately. That happens.
So don't be a blind follower. Think with your own head. Do your own research.
Yeah, I was going to say we're starting to like sound like conspiracy theorists.
Maybe we are. Everything is a scam, Soph, on this podcast.
Okay, so on that note, let's look a little bit on the kinds of startup investment scams that are out there, how they work.
I've seen scams that take different forms. Predatory VCs. They're taking advantage of inexperienced founders. The common thread is probably lack of the due diligence. But the reality is that we live in a very fast-paced environment right now. People are afraid to miss the opportunity. So that feels that fear is creating opportunities for bad actors. The solution is very simple, but it's not easy. The solution is slow down. Do the work, ask hard questions. If something feels too good to be true, it probably is.
And I think, like, at least for me, the one really interesting thing is like, what is the scammer's end goal? Like, they might not even really get it 100%, But I think by understanding that, it helps people see it better. Because if you can't really see, if somebody wants to give me money, why would I be suspicious? Because no money is free. You got to get something back. It might not be enough. That is just, but they'll get equity. Well, let me give you some other goals that scammers might have while still wanting to invest in you. Thinking of the Rothenberg example, VCs also need to be careful in some ways, or even the SoftBank example, where it's not just about VCs that might have less than ethical practices, but also making sure that they are not being scammed as well. So impersonations, first category. Impersonations is basically somebody pretending to be somebody else. Simple enough. End goal here for scammers would be to exploit the reputation of real investors so that they can do other scams. So when we're thinking of, okay, there's this big company that invested in this thing. Well, if I tag on to those investments, then I will get credibility by being associated with them, and then I can run other scams. So it's basically like either actually pretending to be another investor or trying to tag on to real investors. So identity theft, basically, but like investor identity.
Investor theft.
Investor theft. So those ones might look like scammers posing as known investors. They might use fake emails, fake social media profiles. So that's kind of how it shows up. The red flags, quite similar to other kind of phishing red flags. So you'll have email addresses on odd domains. There might be in 2016, Sequoia Capital was impersonated, and the domain was slightly different than their official domain. Let me see. It was Sequoia Cap Partners instead of sequoiacap.com. So that's the kind of stuff that they'll do. They'll use a similar-ish domain, but then other things, they would not want to get on video calls because then obviously it's very easy to spot. This was in 2016.
Pre-AI days,
Yep.
which is now you might actually get somebody on the call and they would actually steal someone's image.
Yeah. So in the case of Sequoia Capital, basically they were impersonating the chairman, and they had these fake email addresses, fake LinkedIn profiles. They even spoofed a phone number that made it seem legit. And they targeted Series A startups to get sensitive financial information.
Did they scam any money out of them? Do you know the amount?
They might not want to disclose. So
they caught them.
Yeah.
Okay.
It's Sequoia Capital noticed. Yeah. So the end goal here is to use known names and people and then target Series A startups and try to get their financial information. So in those cases, they want to get access to company numbers, maybe. They want to get access to bank account numbers. It, can go further with there's a fee for this or that, and can you send us money here or there? So it's like a midterm game, kind of.
And that's really clever because what a series startups want is that obviously being associated with Sequoia. It's not just the money, but it's also getting that recognition from Sequoia that will open a lot of doors for that startup itself.
So in this case, what could they have done to protect themselves? Make sure that the email domain is the correct one, is the official one. That's not always easy to find, but you can find out. Try to contact the actual person, the real investor, through other official channels. So wherever they contact you, find somewhere else and find different places to contact them and make sure that you're actually speaking to them on official channels. You can DM companies on LinkedIn. So that's a possibility. If you know that it's the official account, you can always be like, hey, I got this email from your chairman, just making sure it's actually your chairman.
And I guess the easiest way to check is what's the real company domain is just put it into Google.
So if you want to make sure that you're actually doing it safely, Cloudflare has a domain checker. So you can just put the domain in and it'll check what it is. Super easy. They're free. So you just put it in and then you can see what's there. And you can even see when it was registered. So check when it was registered. If Sequoia Capital Partners .com was registered 2 weeks ago,
probably a scam.
There we go. We can pass that one on. Other types of impersonations, we'll see scammers that will actually... So that also happens as well in 2019, another case. And the names were slightly altered. They'll use... I'm a new partner. So you might not find me on the website yet, but I am associated with these people, etc. So LinkedIn now has you can have a verified profile and you go through your company's email domain. Whoever owns the LinkedIn company page, they will put the verified domains. So if it's xyz.com, then it's that. And then if you want to get verified, then you need to get an email sent to your name at the approved domain, and then you get the verified, right? So these people obviously will not have that. It's very easy. You can associate yourself with tons of different companies and schools, and it doesn't make a difference. Yeah. So on LinkedIn, like, it seems legit. You're like, oh, I guess this person works here. Like, no.
So that's
You
funny.
don't.
Somebody did that with our company, and it kind of like notified. They even tagged us. They were like, "I'm happy to join Supermetrics," and I was like, "You are in a country that we definitely don't employ people at." And I DM'd him like, "Hey, please, can you take this down, because our HR was like, confirmed that you did not join us." And I was like, "Oh, sorry, I was confused." And then he took it down. I was like, "What do you mean you were confused?"
Well, the thing is especially with companies that have affiliate programs, you might have people that will do that as well. They'll put a list of all the different, like, I've been accepted in the affiliate program, so therefore I'm going to put it in my experience. Yes. But really, it's not super hard to sign up for affiliate programs, right? You're not an employee if you have an affiliate link. That doesn't count.
Another thing I've seen is that people who are influencers and they put their working location as Instagram or YouTube. I'm like, no, sweetie, you don't work at YouTube.
Yeah. So those kinds of situations make it harder to identify if somebody actually legitimately works for these companies. And so, you know, in this specific case, basically it was marked as, you know, latest partner or whatnot for a real VC, but unfortunately this person did not work there. This name was a fake name, all of that kind of stuff. So what are things to look out for? Is there a verifiable physical address? If yes, does everything match? Does this LinkedIn company page profile seem like it's slightly off? It might not be the actual legitimate one. Some scammers are really bad. They'll actually put an address and you'll go on like Google My Business or something, and then you see the fake address, you know? So yeah, if you're actually trying to figure out if it's a fully fake company, then you want to see, are the team photos stock images? Can you reverse image search and see, is the team real? So this whole no actual physical address situation, check those. And so if you start digging into these VCs or these investment companies, then you might start seeing inconsistencies. And if you can't find out who the people are behind, or if you can't find the actual specific people for legit businesses, then those are like super big red flags.
Okay, so I would always ask for references. Who have you worked with on both sides? Who have you worked with? What do you like, just track record. And if it's a new thing, then like, I want to see your website. I want to see your team. I want to see that they're legit people. They exist and they're like verifiable, because like, of course there's like new things that emerge, like new funds, new companies, whatever. But I want to then feel reassured that the people exist and that they are legit.
In person.
In person would be pretty kick-ass, because you can fake profiles, honestly. And I've heard of people having their profiles duplicated. So yeah, in person meeting, especially like if it's investors, heck yeah, like I need to make sure that you exist.
So those are the more on the like impersonation style or type of scams, but that's mostly what people kind of see. Now, of course, if we're thinking scams, we're thinking people want to take some money, right? So how does that work? How do they actually get money out of you if they're trying to invest in you? Well, there's a bunch of ways. So one of them being advance fee fraud. They'll promise to make investments, but they ask for upfront fees, for legal fees, compliance, administrative fees, due diligence fees, all these kinds of things. So it's, yes, we'll give you $1 million or $2 million or whatever like number, but we need to do due diligence, legit, but you need to pay our accountant and our finance people and our legal people.
Respond to the scammers with like, can you just deduct it from the amount that you plan to invest in me? Watch them disappear into the ether.
And obviously there's going to be claims of like, you need to hurry because our round is going to close up and you want to get into, otherwise you're going to have to wait another half year, whatever that is.
A little pressure with emergency.
Yeah. Or they'll talk about, well, in our location, this is the kind of like, this is normal here. So you have to do that here. So those are kind of, they'll try to like chalk it up to that. Like, oh, it's not normal where you are, but for us, it's normal. And usually it's really like super large investments. So those are kind of like, okay, thanks for giving me $10 bajillion, but like, that's not a real number. VCs do not charge startups to evaluate them. I've met with VCs. They've contacted me and they're not going to charge you for like talking about your product or looking at your financials or like seeing if it's a good, like that's part of their job.
Yeah, because
they're
the ones
they will not charge you. Yeah.
For legitimate reasons. So yeah.
So in 2020, the Singapore-based startup was approached by apparent investors that were from Middle East Sovereign Wealth Fund. Oh dear. They actually had video calls. They didn't meet in person because they were in different countries, but they met on video and they had asked for $50,000 in fees for regulatory compliance checks, saying that it was standard practice for sovereign wealth funds. Yeah. Fortunately, this particular startup did not pay because they had legal that found a pattern and that actually saw that it was quite odd. But they had even said like, oh, yes, let's meet up. We'll be in this country or that country and, all these things. There's a problem here. So yeah, that's a thing. It is the long game. In this particular case, they had spoken to a bunch of different people on video.
From that alleged fund.
Yeah. And it seemed kind of odd. They'd spoken on the phone. Ultimately, it seems that it was all the same person. So the phone, like, hey, I'll pass you on to my boss. And then the person just had a different accent.
They put like funny mustache on. Like
the video was just one. Yeah. But the phone calls, it's like, I'll pass you on to my boss. And it's just like,
it was like,
changing.
Hello, I am the boss.
Yeah. Yeah. Yeah, pretty much. Yeah. So,
It's a good thing they had like a lawyer. Like, that's where I'm like, talking to somebody else that is experienced in that field or knows how these things should be like done is definitely a good idea in this case.
I guess the real advice here is do your own due diligence. If you can't find any kind of trace of these people online and real references from other companies, other people that have met them, then there's something off. All the investment people that I've met and see, so I hadn't met them before necessarily, but I've seen them in person. They're associated with legit funds that I know have invested in legit companies that I have seen their offices and like they're real people. Now, that doesn't protect you from being scammed necessarily because real people obviously scam. Like that's not the thing.
The scammers.
Yes, but if you can't find any kind of character reference, then you really gotta, watch your back.
The alarm bell should be going off.
But have I run into sketchy investors in events? Definitely. Let's get you like saying that, oh, I invest like, in this multi-million companies. I have this amazing fund and not having anything to show for it. Like, where's the proof? I want to see it. I want your references. Show me a website, like literally anything. But it's all just like buzzwords and no actual, tangible proof.
An interesting kind of like fee fraud situation is actually the middle people. So we went to Slush. Slush is kind of a middle event. It's like we bring startups and investors together. Well, it works, which also means scammers will do it, right? So then some of these people were like, we will bring all of you together. We will match make and it's going to be great. But then you charge all these people. I mean, Slush is pretty expensive. So you charge all these people and then there's no actual introductions being made, or there's just like, you don't have the right people. And it's a matter of, let's have a whole list of potential investors and a whole list of startups, but really there's no kind of background check. And it's just, I'm just going to put all of these people in a little group chat and great, thanks. Usually what you'll see is there's no real track record of actually matchmaking. Like Slush actually has numbers of this is how much money has been invested at each event. And this is the amount of deals that have happened at this event. That's a verifiable track record, you know? They do the Slush 100 pitching competition. I've met past winners. There are real businesses that are running. None of this is a scam. It happens. But some of these events, there's all these maybe smaller events that claim to be the middle person, and then nothing happens. These round tables, let's bring you all together. And then you're just like, this is all bullshit. Like, none of these people make sense. Like, it just, yeah. And then they collect fees. It's like it's just like, you know, exclusive group of networking. So it's usually networking based.
Yeah, that's an interesting one. Like in our previous episode, we talked about how the world of startups and VCs, it is pretty much like who you know. And like people want to have that opportunity to network. So it's very easy, again, I imagine, to lure somebody in if you're going to be like, yeah, this VC fund and that VC fund will be at this event. And then you go there and they're like, oh, sorry, they called in sick. They can't come.
Yeah.
And paid like $1,000 for this one ticket.
How can you protect yourself? Basically, don't pay for introductions, period, right? So at Slush, you don't pay for introductions, right? You go to the event, there's content, there's talks, there's, you know, Q&As, sessions. You pay to go to the event, yes, but you don't pay for introductions. So then it's up to you to find people to introduce yourself to. You're not paying somebody to make the introductions for you, right? Make sure that there's actually successful connections that have happened to sexual networking. Like, we know that Slush has had in the past many very successful startups come out of it. So, but checking the person's references as well. I've gotten plenty of lovely intros, people in the Helsinki scene or whatnot, but nobody's charged me to introduce. Like, that's absurd, right? In 2018, there was a case about a fake investment consultant. So unfortunately, you know, I do consulting, but a lot of consultants have bad names because of these kinds of people. He was charging both the startups and the investors for introductions. He would have these elaborate virtual pitching events with fake investors that were hired actors.
No.
30 startups paid over $10,000 each to join these pitching events with fake investors. Eventually, it was taken down by the FBI, but yeah.
Paid actors aware that this is, or they were like,
they usually don't
along.
know until it's kind of too late. I don't actually know what they told the paid actors, but usually, and this is based off of other kinds of cases where they hire actors for scams. The actors won't know. And what they might think is, so in this case, this is a guess. I wouldn't be surprised if what they told the actors was, well, you're here to help them practice their pitching.
Mm-hmm.
So I wouldn't be surprised if this is the same kind of thing they told the actors, like, hey, these are startups and they're here to practice their pitching. So you need to pretend to be an investor.
Wow. That was actually
not realizing that the startups are paying money, thinking it's a real investor. Yeah.
Wow. That's impressive.
So unfortunately, starving actors are used in these kinds of situations, and it's not usually their fault. This year, famously, Willy Wonka experience, the whole actors. They did not realize how bad it was going to be until it was too late.
They were there and they're like, I can't get out of this anymore.
Yes. All right. Lastly, if we're thinking, okay, the goal is to charge people insane amounts of money or, you know, advance fee, due diligence fees. Okay, I guess I get that, right? I'm charging people. When it comes down to then data mining, it becomes a bit more difficult to spot. So when we're thinking of, I'm sending you a fake invoice, okay, fair, I shouldn't pay it. I see where they're going with this. But then when they're not actually asking you for money, sometimes it's hard to be paranoid when nobody's asking you for money, right?
I think this is the kind of tinfoil hat that you always have in your head because, like, you know, I think like this, I'd say, early inquiries, they are coming. So you never know if it's like real deal or that they just want to fish some information.
So one case, basically they had technically legit investment or professional looking investment. They had odd clauses within their agreements, and it basically gave them legal access to sensitive information. So in 2021, there's a startup that got a term sheet from an apparent investor, and it looked all quite legit, professional and whatnot, but there were clauses that were giving them information rights. And so what happened there, the scammers were then able to get access to customer database, technical documentation, which they then tried to sell. So data mining. So they were pitching for information so that they could sell it. So the money is being made elsewhere, right? And then they're trying to sell it to competitors. That happens. The amount of times that I've gotten emails like, I have a list of this much, these leads or this information, and I have the customer list from this competitor. Those are usually stolen, just FYI. When it comes to data mining, there might be an odd clause in an agreement. So make sure that you look at those so that they don't have legal precedence to have access to this.
Blindly just sign stuff. And like another thing is like you reading it yourself, but just give it to somebody who knows the legal language and what you're getting into. Because a lot of the times, like I receive NDA or something from a partner and I read it and like looks fine to me. I send it to our legal team and they come back to me with like 5 questions like, what do they mean with this? What do they mean with that?
Yes. Investors should not have access to like information rights. That should not be a thing. But anyway, another kind of scam that with an end goal of basically getting data is that they'll make small investments or they'll actually take minor roles or maybe advisory roles within a company to then get intellectual property, to get intelligence, or to then be able to do larger fraud. This case specifically had the company made $50,000 investment into a startup, but over 6 months they gained their trust and access, and eventually they copied their entire code base and client list. They eventually launched a competing product in another market, but using the original technology. So when you think about it, like $50,000 investment, but then you get some proprietary data, it's worth it, So for there, make sure that you protect yourself from, minimum access. Not everybody should have access to a lot of that information, that data. Make sure that you do security audits, who has access to what, and that you have clear documentation on who has access to what. Because those kinds of like stealing code bases, you'll see them with either this kind of case where it's an investment, or you'll see it with these fake candidates. And so there you might also have, especially with now that people are hiring remote, is people coming in as potential candidates for a role, sticking around just long enough to copy code bases information and then leaving. Obviously, they sign NDAs and they sign all these things.
But as we know, they're going to come back to work, like, what are you going to do about it?
Well, you can sue them, but
if they're in a different country.
If they're in a different country, if they've used fake names, if they're actually impersonating people, then who do you sue? Well, you might actually find the person they were impersonating and you never actually spoke to the person. So, yeah. So that might be a thing.
Super common.
Yeah. And the last one, I guess, which is the slightly gray one, is the data harvesting with the premise of due diligence. And it's hard because if you run due diligence and then like, well, I'm not going to invest anymore because you found stuff out, then it's obviously that's the whole point of it. But then you have cases like in 2022, a biotech startup was, again, approached by investors, and the due diligence, they requested detailed technical documentation in the startup's drug development process. The documents later appeared on dark web forums. And so what was actually happening was that the apparent investors were actually working for the competition. So it was, fine. Yeah. And so making sure that you use NDAs, making sure that what you share as information makes sense, that you don't just dump everything at once.
Again, like the intricate details of how you produce your...
They're doing their DD. Like that's part of, they'll request some kind of, because again, remember SoftBank, they didn't do enough of that and then they get screwed. So like, I get it.
Yeah,
but
also wants to burn. But then, as a company, you kind of also, I don't know, like, do you have to share everything? Can you omit some, or I don't know.
Yeah, so you need to be careful. Now, not everybody gets caught. Some other lovely stories where people don't get caught, and what have they done to make sure that they didn't get caught? One that we were talking about earlier, they had actually checked the email domain. They had gone on a video call with the camera on. And I was saying earlier, can you verify people's character? Can you find other people in common? So ask for a warm introduction through their network. Do you know anybody in common? What can they say about them? If there are any weird terms in terms of, legal agreements, speak to a lawyer. That's usually good. And actually contacting them through other channels. So some other startups that have gone far enough into these odd situations, that's usually what they'll do, and they'll find out how to make sure that they're safe. Yeah.
We almost never in the very early stage when you discuss with angel investors, for example, or pre-seed funds, you don't start the conversation with NDAs, or if you discuss with entrepreneurs, you just sort of have the talks. And if somebody takes inspiration from your ideas or your insights on something, I guess there's nothing you can do about it. It's more matter of ethics. But I would say these examples are in the gray, not being scammed.
I guess it's smaller startups that maybe are a little strapped on resources that may not choose to go with some legal representative. But I would say it's money well spent if you get somebody to represent you and verify that this is indeed the correct process and the clauses and legal documents that you're about to sign are also beneficial for you.
Yeah. It's you don't necessarily have to have a lawyer on retainer, but making sure that before anybody gets access to anything gets signed, that things make sense and that you won't be stuck later on. We've heard of plenty of cases of early employees of startups not having the right kind of legal backing to their claims of, I helped build XYZ. It's like, okay, cool, but there's no proof of it. And then they're basically being cut out of their portion of equity or whatever it is. And so any time when we're thinking of people's work or their compensation or investment or all these kinds of things, like even like intellectual property, you just need to be really careful as to how can you protect yourself if something does happen, and does that even make sense? But yeah, it's not because people want to give you money that they're not trying to scam you, is, I guess, the ultimate thing. Most VCs are legit. So like definitely it's not like ban all investment and whatnot. And it's, yes, there's the whole legit part of should you bootstrap or should you privately fund or should you VC? That's all fine. But just keeping in mind that it's not as obvious as that a lot of the time. And that's how they kind of get you, is it's not necessarily, I want to steal your money by being obvious about it. They're going to try to find some other ways. And sometimes it's stealing data and not so much your bank account. So ultimately,
Are VCs legit? It depends.
There are some, yeah, for sure. Most VCs are legit. I think it's mostly about, is it a right fit?
Yeah.
For the ones that are actually legit?
Like, do you have to take VC funding? What are the alternatives to these alternatives? VCs are legit. It's just, as you said, is this the right time? Is this the right fit for my future plans or intentions?
Yeah. Yeah. And, as most scams in general, of course, there's going to be some in these kinds of cases in all different sides, because there's a lot of money being made, obviously, in this world, startup world, tech world. So, of course, people are going to try to take advantage of that as much as they can.
Stay tuned for next week's episode, because we talked about it already in this episode, but we're going to do a little bit of a deep dive on AI. Is AI legit?
Mm-hmm. Should you be using it to, I don't know, do whatever menial task? Sometimes, maybe, sometimes not. Are you actually killing the environment by using AI too much?
And your brain cells.
And your brain cells. Yeah.
I swear I get dumber every time I give AI some task like that I'm too lazy to do. But yeah, if you enjoyed this deep dive into the world of venture capital, make sure to follow Like Is This Legit wherever you get your podcasts.
And see you next week.
See you next week. Bye. Slush, Ivana Pesek-Forbes,
Maria Lukkainen, Vivi Martinen,
Misha Kaltushev,
Anni Salo, Rémi Bertoli, Sophie Forest,
Divotsna Yankir, Henry Haksiala, Zhao Hampo,
and Kore Stolberg.
Dear listeners, please note that the views and opinions in this episode, like all episodes of Like Is This Legit, do not reflect the official position of the podcast and are the hosts and guests' subjective opinions and quoted allegations. The content from each episode of Like Is This Legit should not be taken for indisputable fact and should be viewed as an educational starting point for listeners. All content shared by our hosts, guests, and sponsors are their own opinions and are not meant to defame or misrepresent any business, group, organization, individual, anyone, or anything. Just don't scam people. Okay? Okay.